Hello everyone, Suresh KP from myinvestmentedge.com. Today we're going to discuss about PGIM India Balanced Advantage Fund NFO. What are Balanced Advantage Funds? Balanced Advantage Funds are also called Dynamic Asset Allocation Fund, which generally dynamically manage between equity and debt based on the market condition. Assume that stock markets are up and high on valuation, then it will have lower portion allocated to equity and higher portion in debt. Vice versa, if stock market is on the lower side, it's going to have higher allocation in equity and lower allocation on debt. What are the NFO issue details? Scheme is going to open on 15 January, it's going to close on 29 January, it's going to reopen within 5 days from closure. Minimum lump sum investment is 5,000 and SIP is 1,000 rupees per month for 6 months. There is a maximum total expense ratio is 2.25% and benchmark is CRISIL hybrid 50 plus 50 moderate risk index. The investment objective, it invests dynamically between equity and fixed income options using equity derivative strategies and arbitrage opportunities. The scheme seeks to reduce the volatility by diversifying the assets across equity and fixed income. How is the allocation pattern? It's going to invest equity and equity related instruments between 65% to 100%. It's going to invest in debt and money market instruments up to 35%. Why to invest in this Balanced Advantage Fund? This fund would do asset allocation based on time tested DAF model, which works on buy high and sell low concept. This fund would invest on a dynamic asset allocation. So if the stock market is overvalued, it's going to reduce equity and move towards fixed income. And if stock market is undervalued, then this scheme will increase equity and then reduce the debt segment. Now if you see, this fund is going to invest on a model that has already beaten Nifty 50 in both bull phase as well as the bear phase in terms of the rolling returns. Rolling returns is nothing but the consistency in the returns. So this fund invests in equity and debt portion, so hence it reduces the risk of having higher portion in equity. What are the risk factors of investing in this Balanced Advantage Fund? This scheme invests in debt portion. So these days investment in debt has become high risk because of the downgrade of the corporate credit ratings and the defaults done on the payments by the corporate. This scheme invests in derivatives. So there is a derivatives is a price discrepancies in cash and derivative segments. So derivatives are high risk. The scheme invests in foreign ETFs and securities. So there is a geopolitical risk as well as a foreign exchange risk. For complete risk factors, you can refer SID and KM or prospectus of the mutual fund scheme. Let's see the performance of existing Balanced Advantage funds. If you see, we have given 3-year, 5-year and 10-year annualized returns. The returns are ranging between 4.4% to almost, I can say, 11.6%. Now if you see in the short term, they're showing any lower returns, but if you see 5-year, 10 years, anywhere the returns are ranging between say 7% to your almost 12% returns. So investing for a long term, always investors will get benefited in such funds. Now, should you invest in PGIM India Balanced Advantage Fund NFO? So this fund invests in equity and debt portion based on the dynamic asset allocation. So like we discussed, if stock markets are up, then it's going to have lower allocation in equity and higher allocation in fixed income. And if stock markets are undervalued, it's going to invest higher amount in equity and lower amount in fixed income. But again, this will depend upon how well the fund manager is able to value the stock market. So if you observe, the mutual funds under this segment has given anywhere between 9% to 12% annualized return if invested for a long term of 10 years. So moderate to high risk investors can invest in this NFO. Low risk investors should avoid such mutual fund schemes. If you have any queries, reach out to me, Suresh at myinvestmentedge.com. Thank you.